Welcome to Balancing Act, your guide to grow, profit, and scale. I'm Linda Hamilton, a CPA, and for the past 30 years, I've been looking under the hoods of businesses to uncover what truly drives success. This show is different because we know the numbers matter, but the story behind the numbers matters even more. So many things impact profitability and growth, but it's about striking a balance. So today we're going to talk about financial fluency. I use the word fluency, not literacy, because it's about language. What is the language of your numbers? What is the story your numbers tell? Why is this a problem? So many businesses are stuck on how to grow. They don't know how to grow. They don't understand how much cash they have or profit they have. And I think a little part of that is a lack of financial fluency. Understanding that creates a pain point. You go to your accountant, they tell you you have taxes to pay and that you had a profit, and you say, I don't know where the cash is. What is my profit? So it really does matter that we understand what numbers are telling us. And today with us, we're going to have Alana McNichol, a CPA and MBA and the Tax Practice Director for our firm. And she's going to help us unpack these financial statements so you know where to start. Alana, thank you for coming on today. Let's start with the balance sheet. How does that impact financial fluency? What does it mean?
Thank you, Linda. So happy to be here. And I love that we're talking about language and stories because the balance sheet is telling a story about your business. And it's so important for you to understand that story because other people want to understand that story too, right? The balance sheet and all your financials aren't just sitting in the hands of you as the business owner. They're going to different places. So it's really critical that you understand the basics of what is on a balance sheet and what yours actually means. So I think we should lay out the sections of the balance sheet so you can understand sort of top to bottom what parts are listed on this form and what do they mean to you. So Linda, I'm going to start with the top of the balance sheet, which are the assets, right? Assets is basically either everything you have or everything you're entitled to. And of course, we know cash being the biggest, most obvious asset when we're looking at any balance sheet. But that also includes other things like accounts receivable and inventory. So those numbers are really important because you want to make sure that those are correct, right? That the balance sheet, yes, that's the money I have in the bank. Yes, that inventory number matches what I know is in the warehouse. Linda, you and I have been practicing for a long time. I'm sure you've picked up a balance sheet and taken a look at that asset section and come back to a business owner with questions.
Exactly. And I'm glad you put it that way about the story of it going out to others because, one thing is business owners, most of them will go and look at their profit and loss statement or their income statement. But many people, they just don't look at a balance sheet. What is a balance sheet? I have no idea what this report means. And it is a report that's generated from your accounting software. It's also on your tax return. So Alana, you mentioned that this report will go to others. For example, who else will look at your balance sheet?
Yeah, so I mean, I think a third party like a banker is really one of the most important relationships that you as a business owner have, right? You've got this balance sheet. It's telling anybody, hey, here are the assets of the company. Here are the liabilities of the company. If you are looking for funding, if you're looking for working capital, those financials are the first thing that any third party is going to ask because they're going to want to know, hey, what is this company really worth, right? And a balance sheet is a big part of that. And I think the worst position you can be in as a business owner is to realize that you need something like a balance sheet, right? You need a record that shows, yes, these are the assets of the company and these are the liabilities of the company. And it's not complete or it's not a total picture of what's really going on in your company. And at that point, if you're already in the mix trying to look for something like working capital, you may find that you're in a bind. You're scrambling to get these numbers to be accurate. I was working with a business owner last week. We pulled up her financials. That balance sheet said that she owed payroll taxes in the amount of $45,000. And I said, that doesn't really sound right. And she said, no, that's definitely not right. But imagine the position that you would be in as a business owner if you thought to yourself, hey, these books are done, and somebody else picked it up and saw something like that. Right. So that we talked about assets a little bit. Liabilities are the other side to the balance sheet. What do you owe and to whom? And when is it due? Right. You have liabilities that are due now, you have liabilities that are due in the future, right? But all of those things kind of sum to numbers that are really, really important.
Now, and so let's step back for a minute. I don't have an image to show you of a balance sheet, but if you imagine for a moment a report that on the left of the page are this sum of assets. Alana mentioned, cash in the bank, accounts receivable. That means what people owe you. What do your customers owe you? And that, and it might have some computer equipment then there. And then on the left, it'll have total assets. And on the right, what we'll have is, and I realize maybe I'm a little backwards here, we'll have liabilities and equity. There's actually a formula for a balance sheet. It does balance. So assets, what you own, are equal to liabilities plus your equity in the company. So Alana, let's talk for a minute about when we see liabilities, maybe that don't change. I always tell business owners to actually open up, just look at the report, start to look at it every month, see if it makes any sense to you, and start to ask your bookkeeper or your accountant to explain these numbers. But what happens with liabilities? A liability could be what you owe your printer, what you owe in rent. You could owe different vendors money. What happens if those numbers aren't changing on your balance sheet?
Yeah, so a great point to keep in mind is that a balance sheet is a snapshot of any one point in time, right? When you're looking at the balance sheet, you're choosing a date to look at it, right? So today I owe my credit card company $10,000. Well, if a month from now the same balance says $10,000, something's not working, right? If your liabilities are not changing, that means they're either fixed and they never change, or there's something that's not flowing through the liabilities. And so that can become really dangerous if you're relying on your books to tell you when things are due and who you owe, right? So if those numbers, if they're not changing or they seem inaccurate, something is not working. The same client that I was looking at her books, it said that the liability on her credit card account was a negative $15,000. And so I said, oh, did you overpay your credit card bill by $15,000? She said, no, definitely not. Right. So again, something is not flowing through there. And managing your liabilities translates directly to managing cash flow. I know we'll be talking about cash flow later on the show, but it's really those numbers you may sort of have in the back of your head, right? Oh yeah, I owe my vendors about $5,000 over the next month. Okay, if that's how you're managing those numbers, that's fine. But are they on your financials? Does that back of the envelope match what's being recorded on your books?
Right. And so let's think about that a little further. So this balance sheet is kind of the health of your company. The bottom line of a balance sheet is equity. That's what you, the business owner, owns in your company, right? So what did that mean? So let's think about that. You had assets in one column, right, that are $100,000. And then on the other side, since the formula has to work, you have liabilities, people you owe money to, let's say are $60,000 and 40,000 is left over. That means that's your investment. Your creditors are funding you keeping these assets. That's a hard concept to get a hold of. And I understand that. And I never expect a business owner to really understand that right away. But over time, a business owner, if they start to look at this report, they start to recognize and notice things. And that's when you can say to your accountant or your bookkeeper, explain this number to me. How come it hasn't changed? It's the same number year after year or month after month. What's happening here? You want to understand the health of your company and the bottom line of equity of how much is your investment in your company. Um, Alana, before we close out this segment about balance sheet, because we'll talk next about profit and loss, how can people find out more, learn more about the balance sheet and why it's important for them to have an understanding of it?
Yeah, definitely. I mean, ask your bookkeeper, pull up the form itself, and have a conversation with your accountant, right? I mean, that is your trusted advisor. Those are the people whose doors, we should be able to walk through if we need to. And if you're still lost, you're still confused, feel free to drop on our website or shoot me an email. We're happy to talk to you about these numbers and help you make sense of them.
Exactly. And this report is the one that will really take you forward in the future, will improve the health, and will help you make smart business decisions about growing your company. So we'll come back in a moment. Stick with us now. Alana's going to stay with us, and we're going to talk about the profit and loss or the income statement. I just want to close out by telling you the takeaways from this segment on balance sheet is look at it every month. Compare it in QuickBooks or on your tax return to last year. So look at this year, last year, see if the numbers changed. See if they didn't change. Ask your bookkeeper or accountant to explain them. You will have a lot of insights there, and that report will be more accurate when you are paying attention to it because it is bookkeeping that causes it to be inaccurate. Stick with us. We'll be back in a moment.